Now, that said, if the banks are over leveraged, what does that mean? It means the economy is over leveraged, plain and simple. We like to blame the banks, but the banks are just, the financial industry is just a pass through of debt to the real economy. When I talked about the 10% increase in debt in the last 2 years, between 2017 and 2019, that was households, businesses, and government. And just to be clear that I'm not being political here, boy, the government debt has ballooned a lot since 2008. It's been both political parties. There doesn't seem to be anybody who is concerned about this, both political, but it's not just the government sector. It's been the corporate sector and the household sector as well. So the financial sector is literally just a mirror of what's going on in the real economy, the households, businesses, and government sectors. And all three of those have been pedal to the metal on borrowing really for the last 50 years. This is, just to be clear, I'm talking a lot about 2008, but we've had so many attempts by the free market to assert itself. It was 1968. We did have 1 year during the financial crisis during which we saved more than we borrowed, but every other year since then, we've borrowed more than we saved. What does that mean? It means that we're consuming more than we produced. It's pretty simple. And so if you go back in history, why did the US why did we become the strongest economy in the world, especially coming off World War II? And the answer is we had the strongest balance sheet. We were an equity financed economy. And what I mean by that is, if you looked at the amount of money saved every year and the amount of money borrowed every year, it was essentially equal, year in, year out. The borrowing that people did in the United States was from somebody else's savings within the United States. So we were what I would call an equity financed economy. We were not borrowing against our future in order to consume more today. And we started doing exactly that in 1968. That's when the guns and butter programs, so to speak, were taking effect. And so a lot of people point to 1971 as the problem. I actually point to 1968. That's the year in which we started really outliving our means. And every year since then, except for 2009, the United States has outlived our means. And so how were we able to sustain it for 50 years? I think a lot of people are saying, well, gosh, we don't have to care about the debt. This is something you'll read in mainstream media. We don't have to care about the debt because we owe it to ourselves, or we can just print money. And therefore, we can just push pedal to the metal and keep printing money and borrowing and to respond to these crises with monetary and fiscal policy, respectively. It used to be one or now it's both, and now neither one of them seems to be working very well. The quantity of stimulus that we're having to throw at this most recent crisis is staggering, because the size of the bubble is that much more staggering because we've had so much debt issued that's non-productive in especially the last decade, but even especially the last 2 years. And so what I would say to those folks is, you got lucky. The ones who think that debt doesn't matter, you got lucky, because for 50 years we were able to do this in the United States because our parents and grandparents and their parents and grandparents bequeathed us with an unbelievable balance sheet. We net debt on our balance sheet up until 1968 in the United States. We were all the borrowing that people did in the United States was out of somebody's savings, and so that net debt was zero for decades. And then we started going to town in 1968. And, unfortunately, if you look at the balance sheet of the United States right now, it's kind of an ugly situation. We have 83.3 trillion of non-financial sector debt outstanding. Again, that's households, businesses, and governments together. I would also add the Fed's balance sheet should be added to that as well. So we're really north of 87 trillion of debt. And I looked it up last night. The net wealth of the United States is 104 trillion as of year end 2019. So we've got, right? And that's not fleeting. The debt is contractual. That's somebody's debt, real obligation. That's real. Whereas some of the assets backing that $104 trillion number are not real. They're fleeting, right? We just saw 20 trillion come off the stock market. So if we've got 87 trillion of debt and 104 trillion of net wealth to satisfy that, and we just took 20 trillion of value off financial assets last week, you do the math. This is why people, I think, are not irrational to be nervous about the situation and start questioning whether the things they've been taught are really right.